Good evening. Welcome to this edition of Global Business Africa. The next half hour will make a speed run through all the key business news stories that you need to know about coming out of the African continent. Today's program, however, is a bit of a nomad. So for the next half hour, we'll take you to Cairo, Johannesburg and New York. You're in for one hell of a ride. Here's what's coming up. Ebola continues to ravage West African economies. Can solutions come from the UN General Assembly? Egypt continues its efforts to attract investments for its economic recovery. And will pay a visit to a processing plant in Rwanda that traces its success to the one cow per household policy. An event aimed at promoting trade and investment between India and Africa has been postponed. Why? Concerns about Ebola. The India-Africa Forum Summit, or IAFS, was due to take place on the outskirts of New Delhi on the 4th of December this year. There were about 1,000 or so delegates, including heads of state, businessmen, journalists from all 54 nations of the African Union invited. India's Foreign Affairs Ministry decided to postpone the event, however, because of the large number of delegates expected. The Ebola outbreak, of course, has killed over 2,000 people in West Africa. 5,000 more are reported to be infected. Under the framework of the IAFS, India has provided assistance in areas such as food and energy security through the sharing of expertise, as well as setting up training institutions in several African nations. Now, elsewhere, the African Development Bank wants the business community to now chip in to intervention efforts to fight Ebola. The AFDB's president, Donald Kaberuka, wants mining companies and businesses operating in countries affected by the virus, that's namely Sierra Leone, Guinea and Liberia, to help rebuild the region. The disease started killing people en masse in March this year in those three countries, and it's hurt their economies, especially the mining, farming and services sectors. It's also prompted airlines to suspend flights and expatriate workers to evacuate. A number of mining companies, including major multinationals, operate in West Africa. Many of them have acted swiftly to keep Ebola at bay. Mr. Kaberuka says that miners not only protect operations but also provide expertise in the battle against Ebola. Now, then, the World Health Organization has warned that up to 20,000 people, it's an absolutely staggering figure this, could be infected with Ebola over the next 6 weeks. As Maria Galang reports, implications for West African economies that are hardest hit by this disease are gargantuan.
A few months ago, Sierra Leone had high hopes of becoming an African tourist hotspot, but its beaches are now deserted. Ebola keeping the tourists away. Hotel managers in the resort town of Freetown have rarely seen business this bad.
We had to lay off our staff because we cannot maintain them anymore. We cannot maintain the overheads. We cannot maintain the running costs of the business.
More than 2,600 people have died in Sierra Leone, Liberia and Guinea, three of the poorest countries in West Africa. And Sierra Leone could lose 9% of economic growth next year. A recent 3-day lockdown there, designed to slow down the spread of the disease, has been hailed a success, with 130 new cases recorded. But the World Health Organization's Director of Strategy has warned the crisis will get far worse before it gets better, possibly infecting 20,000 people by November if effective controls aren't implemented.
We are now in the third explosive phase of growth of the epidemic. This is exponential increase, with hundreds going into thousands of cases per week. And if we don't stop the epidemic very soon, this is going to turn from a disaster into a catastrophe.
As well as the service sector, the disease has crippled mining and agriculture in West Africa. The countries also rely on each other for much of their trade.
Traders and businessmen are struggling because they used to sell their merchandise to Sierra Leone, Liberia and other neighbouring countries. All the borders are now closed. We must do something now to help them.
WHO says it will take $1 billion just to limit the spread of the disease, and it could rumble on for years. Maria Galang, CCTV.
Now then, the United Nations General Assembly is of course taking place at the moment. Where exactly can it chip in to the fight against Ebola? Let's find out. Nick Harper's live in New York. He's keeping tabs on developments over there. Nick, the agenda for this year's General Assembly doesn't include the Ebola crisis. Is it likely to crop up at any of the planned side events?
Well, yes, so far we've heard a lot about climate change. We've heard a lot about the terrorist threat from IS, or the Islamic State, but we haven't heard very much about Ebola. Even the US President Barack Obama, when he spoke this morning for 35 minutes, barely gave only a couple of sentences to Ebola. However, on Thursday, that is when the focus will turn to Ebola. The UN Secretary General Ban Ki-moon has said that he will convene a high-level meeting to discuss the situation, really aiming to tackle three main issues. He wants to focus international attention on the problem. He wants to mobilize an exceptional response to contain and stop the spread, and he wants to work out how to try and treat the affected. We're expecting to hear from the President of Guinea, also the President of Liberia and Sierra Leone. Those two will attend via video conference. The United Nations General Assembly and the United Nations Security Council in the last 2 weeks have both passed resolutions trying to deal with Ebola, but it's hoped that on Thursday we may hear a bit more detail on exactly how all of the countries affected will handle the problem.
Yes, indeed, Nick. But let's focus, however, on some of the direct aid measures that are being put in place. The United States, for example, plans to deploy over 3,000 troops to West Africa to build treatment centers and to train thousands of health workers. Should we expect more announcements of aid of this sort at the General Assembly from other individual member states?
Well, at this stage, it's hoped that'll very much be the case. We're hoping for some real concrete action to come out of Thursday's meetings. Over the last few weeks, we've heard many speeches, a lot of rhetoric, a lot of talking about Ebola. It seems that there is international will to try and deal with the problem, to try and stop the spread. But so far, what it's been lacking are those concrete details. And it's hoped that they will come out of the speeches that we'll hear from various heads of state here at the General Assembly over the next few days, but more importantly from that high-level meeting that will be convening tomorrow. Really hoping that we can get some details on how to move the situation forward and how to deal with the problem and stop it spreading further.
Yes, indeed. We'll have to leave it there for the time being. That's Nick Harper live in New York. He'll be keeping tabs on developments at the UN General Assembly right here for you on CCTV. Now, the Egyptian President Abdel Fattah el-Sisi is among the leaders attending the UN General Assembly in New York. He's been pushing for increased investments in his country as it seeks to boost its economic recovery. El-Sisi already gave an address on Tuesday during the climate summit in which he called on developed countries to invest in renewable energy projects in the Middle East. He also spoke a little earlier in the last hour. On different occasions, he's called on foreign countries to invest in Egypt, a country whose economy has deteriorated since the unrest started in 2011. The Egyptian president has already had discussions with American businessmen concentrating on tourism and trade projects in an effort to attract investment to flow back into the North African country. Let's head over to Cairo now to get some more insights from Mr. Rami Mofta. He's a member of the board at Synergy Capital. Thank you for your time this evening, sir. Have there been any firm commitments to invest in Egypt's electricity and tourism sectors following the president's pitch in the United States?
Well, as you know, the president did make a big pitch, especially for two major projects on the Suez Peninsula, and it's one is to do with a major shopping tourist city that will be built there, and the other was a logistics grains and cereals center that should feed the entire region. Now, it is unclear as to whether anybody put ink on paper and actually made any firm commitments. But we do know from the people who attended some of the meetings with the president that some of the investors were very interested in what he had to say and his plans for the economic growth of Egypt, and expressed interest in exploring further. And we have a delegation of investors coming from the United States on the 30th of September to discuss further with the government on what they can do to invest in Egypt's future.
Indeed. Let's talk about Egypt's debt to oil supplies, however. This has been a long-running concern for quite a while now, and it's essentially limited the influx of fresh investment into the country. What progress has been made in settling the debts due to the likes of BP, for example?
Well, the oil sector has been suffering major setbacks over the last 3 years since the January 2011 revolution. The Egyptian government has mounted debts of close to $6 billion in arrears that they need to start paying, and which this year they started addressing, and it is expected that by the end of 2014 they'll have already paid about $2 billion of these debts in order to encourage large investors such as BP, which is one of the largest investors in the country, to continue with their investments in Egypt. They have a major investment of about $10 billion called the West Nile Delta project, which is supposed to, once it's in place and once it starts production, produce about 20% of Egypt's natural gas needs. So the government needs to start addressing this, and I think they've already started talking to people about it, and they've started working on it.
Indeed. Final question to you, Mr. Mofta. With regard to the electricity subsector, is President El-Sisi seeking investment in conventional thermal power plants or mostly in renewable sources?
Well, he's actually targeting both. Now, Egypt has a lot of experience in thermal power plants and getting those going, but they're also going for unconventional sources. We're starting to see ads by the government encouraging people to have solar power cells on top of their houses, and that the government would somehow link these small power generators to the main grid, and then would pay the people for the electricity produced. Now, how feasible this is and how much investment, and if the money is available to do this or not, it seems to be it needs to be seen. However, the government has shown that it can raise considerable amounts of money from the Egyptian public, showing that the public really trusts this government in terms of them raising $64 billion for the Suez Canal project. So they offer other bonds for such projects. I think they'll probably be successful as well, and this will help with investors in the Egyptian power grid.
Indeed. We'll have to leave it there, but thank you for your insights tonight. That's Rami Mofta. He's a member of the board at Synergy Capital, live there from Cairo. Now, we're still in Egypt. Egyptians, like many other nationalities right around the world, are ready for this year's Canton Trade Fair. It's an annual event in China's city of Guangzhou. Traders gather from all over the world to promote trade with the world's second largest economy. The fair was established in 1957. Egypt boasts of traditionally sending the largest delegation from the Middle East and North Africa. The event this year starts in October. Here's Yasser Kim with more.
Trade with China has blossomed recently. It jumped from $6 billion to $10.2 billion in the last 3 years, in spite of the political instability. That's why the annual Canton Trade Fair is essential for both sides to seize the increasing trade and investment opportunities.
We are expecting very good stability of the situation in Egypt, and also very good development in the economy. We have the great opportunity for the cooperation with this the big project, Suez Canal project, and the big project in the transportation and in the energy.
Every year, the Canton Fair receives nearly 188,000 traders from 214 countries. Egypt sends the largest Arab delegation with over 4,000 traders and investors.
Each year, we wait eagerly for the fair because Chinese products are very popular here and are affordable too. We sign huge contracts to import goods for our needs for the whole year. It's always a success.
Egypt imports from China have reached $6.4 billion. Products range from cars to mobiles, electrical equipment, and even toys. Egypt exports petroleum products, metals and ceramics, carpets, and fruits to China. But attracting foreign investments is another aspect of their mutual relations. Chinese direct investments are in the range of $8.2 billion. There are challenges, however, that prevent more investments pouring in.
We are facing sometimes difficulties for our investment here regarding the power supply, regarding the working permit. We are talking, we are in the very good relations with Gafi, with the Ministry of Investment. I'm sure that we will, as friends, we will solve all this problem to facilitate Chinese investment.
In response, the Egyptian president has called on the government to establish a special division on China, aimed at facilitating any procedures for Chinese investors to come to Egypt. As it tries to overcome its economic crisis, Egypt needs at least $10 billion per year of FDIs to sustain a 3.5% economic growth. Fairs such as Canton could pave the way for Chinese businesses to be a major contributor to Egypt's economic development plan. Yasser Hakim for CCTV, Cairo.
The Kenya Commercial Bank Group, it's one of the top 5 banks in the Kenyan market, is sending members of its Property Developers Club to China as well. The idea here is to expose them to world-class architectural designs, master planning, interior designs, and also source building supplies from over there. KCB's Chief Commercial Officer Samuel Nkome said Chinese building efficiency has been tested and proven in industry-focused tech. The club has over 500 investors in Kenya's real estate sector, and they're continuously looking for ways to meet Kenya's growing demand for housing at an affordable price point. That's always a key contentious issue down here. The KCB Developers Club was launched in 2009. It aims to provide estate developers with a chance to meet, to share ideas, get exposed to developments in other parts of the world as well. Let's make a quick run through the market here for you. We're seeing a broad correction, frankly, elsewhere across the board except for Nigeria. Interesting developments, however, over in Kenya. You will, of course, recall the tussle. We've covered it fairly extensively here between ICSI on one hand and its MVNO mobile money license and Safaricom on the other. Interesting developments today. Well, the Communications Authority is essentially saying that Equity is liable for any losses that may be incurred in that one-year trial period. But members of Parliament are also relatively pissed off, for lack of a better word, with the fact that this Communications Authority allowed this one-year trial period to actually take place. We'll find out how this saga develops right here on Global Business. When we come back, Zimbabwe is finding its way into the good graces of the IMF, but it can't borrow from it yet. And we'll be looking at the fine print and the cost implications of a nuclear deal between Russia and South Africa. All that and more is coming up next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
The rebasing of Nigeria's GDP has been a long time in coming.
The information provides us much more scope to know what the structure of the economy is.
"18 minutes into the hour, you're still watching Global Business Africa. Let's take you to Zimbabwe. A decade in the proverbial cold could soon be over for the Southern African country. It's on the road to mending ties with the IMF. The Bretton Woods Institution has reopened an office in the country. It's now working with Zimbabwean authorities to implement a variety of reforms, including lowering public spending and improving how the country manages public debt and how it can tap into concessional loans.
Both the government and IMF put up a united front as they gave the business community here a rare peek into the normally private liaisons between them. It's a relationship full of promise, but there remains one stumbling block.
Zimbabwe cannot benefit from the financial support because it has accumulated arrears payment with the fund since 2000. Let's be frank, this is not much money, $142 million. But it's a problem.
As a result, Zimbabwe cannot access fresh funding until it clears that and settles its dues with all other international financiers. Zimbabwe's total debt is more than $10 billion. The government says it cannot go it alone.
IMF and the Bretton Woods institutions should help us nurture and nurse this economy back to life, back to what it used to be, and not watch on the sidelines and watch us collapse and still while they're engaging us.
For more than a decade, it's been a relationship that's been far from rosy. But now, the two sides are making overtures towards each other, and there does seem to be a warming of relations. However, despite that progress, it is quite clear the normalization of relationships between the IMF and Zimbabwe will be no walk in the park.
Reactions have been mixed. Some see this as the only way out.
We no longer have the pleasure of being an island. We have to engage. We have to collaborate for us to win.
Others, aware of the arduous road that lies ahead, remain optimistic.
Obviously, as a country, we've got a lot of work that we need to put into meeting those conditions that the IMF has put forward. However, as business and representatives of business, we feel that those conditions are not entirely impossible to meet. Again, I want to emphasize that there will be a lot of work that needs to be put in as far as meeting them is concerned.
While some fear that politics could be a spanner in the works.
It is unprecedented that you would find a country that has got poor diplomatic relations with the Americans getting a meaningful IMF support. That is unprecedented, and if it happens in this case, then it's a miracle.
Divine intervention or not, Zimbabwe's economy does need help, and the IMF could be a useful shoulder to lean on. Farai Mwakutuya, CCTV, Harare, Zimbabwe.
South Africa's nuclear cooperation deal signed with Russia. This was announced earlier on Monday. It's part of a tender process that will involve other competing countries. It is, however, not a contract, apparently, to build power plants, according to South African authorities. The Russian atomic agency Rosatom had earlier said that it had signed a $10 billion deal with South Africa to construct 9.6 gigawatts of nuclear power plants by 2030, ostensibly to help South Africa cope with its chronic power supply shortages. South Africa's government, however, say the agreement is still in its early stages, and this comes after the main opposition party criticized the deal. The officials added that the bidding process would be completed by mid-2015 before any final construction contracts are signed. Rosatom officials, however, have not commented on these developments so far. Interesting developments in this story. A little earlier in the week, we looked at it from an external perspective with Miriam Bemard in London. Now, let's look at it from a South African perspective. Angelo Coppola is live with us in Johannesburg with more. Angelo, a lack of finance was the official reason for Eskom backing out of bids for nuclear plants from Areva and Westinghouse way back in 2008. Now, Eskom's finances haven't improved between now and then, so isn't it reasonable to argue there's a finance risk here that may limit the implementation of this latest nuclear plan?
Well, in 2008, Medupi and Kusile power stations seemed to be on track. There was no appetite at that point for a large or another power investment. That was then. We have seen since then that the government isn't afraid to kind of get involved in projects that confirm it has a social conscience. And finance risk will probably be minimized, as it has done in the past, when the government underwrites a guarantee, which is probably what's going to happen in this case. And it's going to add to the current account deficit. But the government will probably go for a kind of a build, operate and transfer, or a build, operate, train and transfer business model. So at the moment, Raman, it's all systems go as far as we're concerned, and probably as far as the Russians are concerned.
Indeed, but speaking of financial matters, I mean, just the other day, Eskom got a capital injection from the government. Given how much capital it needs to raise just to build the tens of gigawatts of power it needs, why isn't Eskom listed at JSE? Wouldn't an IPO enable it to raise the capital it needs for some of this expenditure?
Well, the common sense is agreeing with you in that sense. But in this case, government policy is still to hold on to its national assets and its utilities. And the government track record here speaks for itself. A case in point is Telkom. A little while ago, a portion of Telkom, which is the government or the state-owned telecommunications business, was listed on the JSE. But due to government political control and involvement, it didn't work. So, as we know, South African Airways is another case in point. In terms of the power situation, government essentially provides subsidized access to electricity to the needy and the poor, something that it sees as its duty. However, investors are unlikely to be keen to get too philanthropic here if government remained a key shareholder if this thing did go to an IPO. So that's all based on its track record, Raman.
Yes, indeed. We'll have to leave it there for the time being. That's Angelo Coppola live in Johannesburg, South Africa. Let's take you to Rwanda now. It's been in the middle of a boom in milk production, especially given the successful introduction of the 1 cow per household program. That was way back in 2006. Years later, we have seen an exponential rise in the cattle population in the country. Right at the center of this boom, however, is Inyange Industries. It's the largest local food processing company in Rwanda. Given its success in the milk sector, the food processor has now set its sights on expanding its juice and other drinks portfolio in order to provide for a thriving market for the country's millions of fruit farmers. Peter Akaba toured the facility. He unpacks its strategy on Grassroots tonight.
Between the year 1999 and the year 2012, the dairy sector in Rwanda was transformed from having one of the lowest milk outputs in the world to a booming commercial sector, with supply outstripping processing capacity. The transformation led to an increase in milk production and output from over 92,000 tons in the year 1999 to nearly 255,000 tons in the year 2006 and 489,000 tons in the year 2012. At the center of this transformation is the Inyange milk processing plant, which has driven the market in terms of prices and afforded farmers access to a ready urban market.
We have a contract with these farmers. Whenever they supply to us their milk, after 10 days after submission of their invoices, we just have to pay them. So you can understand, averagely per month we pay around 400 million Rwandan francs to farmers. So this big sum of money, it just helps them to improve their lives.
Milk, however, is just one product line in the company's stable. Other products include a wide range of juices, water and drinks that are finding ready consumption within the Rwandan population and with visitors.
Among the juices, passion and pineapple, we just make them out of the fresh fruits that are grown locally by our farmers. And we are intending to keep on sensitizing them to even indulge into the production of other family of juices, which our machines are ready to produce still.
Most of the company's raw materials are sourced locally, with mangoes, pineapples and other fruits being readily available. Others are imported as concentrates. The company is working to start production of its own fruit preservatives in order to prolong shelf life and even out the supply of raw materials in all seasons.
Under the Ministry of Agriculture, there is a program of putting the farmers under the cooperative, and through those cooperative sensitizations are being done just to make sure that we just show them the interest of investing into different fields of producing fruits, and just assuring them, giving them the guarantee that whatever produces they will be able to produce, the market is there.
Despite the fact that Inyange is owned and run by the government here, it has been able to set the pace for the private sector by providing ready and competitive markets for farmers' produce and thus improve their livelihoods. Inyange Industries was set up with the sole aim of improving the lot of the Rwandan farmer. This company now, with its full complement of agriculture-based products, is at the forefront of agriculture technology development in this country. Peter Akaba, CCTV, at the Inyange Masaka plant in Kigali, Rwanda.
As far as currencies go, the Nigerian naira has closed today at about a 2-week high. The Central Bank of Nigeria selling dollars directly into the market, ostensibly to prop up the currency. But that's where we're going to be wrapping up this edition of Global Business Africa. Do remember, you can send your feedback on the program to globalbusinessafrica@cctv.com. Send those story ideas coming as well. You can visit our Facebook page, CCTV Africa, and on Twitter as well. We're present over there to stay in touch with us online. But that's it for this edition of the program. See you in 23 hours. I'm Raman Yang.